So why do I, as a financial advisor, think that owning a home isn't a come up that it used to be 30, 40, 50 years ago? Stay with me. One thing that I talk a lot about in my practice to my clients is housing and homes. Here in Bay Area, here in California, housing and homes are a really big deal. And many, many years ago, buying a home was the key to the American dream. Many people bought homes in the Bay Area 30, 40, 50 years ago and have seen incredible appreciation in those homes. I talked to a client just yesterday whose parents bought a home in a community close to here many years ago for $26,000. Now, because the land and the lot is so enormous that they bought the house, it's worth $2.6 million. And that is just incredible. There are very few assets that have had that sort of appreciation over the past 30, 40, 50 years. So could you imagine turning 26,000 in 40 years time to 2.6 million by just buying a piece of land and a house to raise your family? And so I've heard stories like that. I am a homeowner myself. I bought a home here in San Francisco. I have mixed thoughts about the entire experience. But when someone is a millennial or Gen Z and comes into my office to talk about home ownership, it's a much more nuanced answer than it was in the past. It's just not the come up it used to be in prior years to purchase a home. And I'm going to talk through the reasons why it's a more nuanced answer for younger people in terms of home ownership in millennial and Gen Zers. First things first is price. You know, a home used to cost $26,000. I don't even know if you can rent an apartment for a year for $26,000 here in the Bay Area. Homes were much more in alignment to what people were earning at the time. It's only probably in the past 30 years that what people earn versus what houses cost has completely moved out of whack. And I think in the past 30 years here, Bay Area, California, things have been incredibly out of whack. But in other places in the nation, maybe in the past decade, things have moved out of whack. It requires so much money, so much capital to get into a house nowadays. Sometimes there's just no comparison between renting and home ownership. Sometimes it's just several magnitudes of order more to own than it is to rent. So whenever I'm talking to younger clients, especially clients that are looking in the Bay Area and we're looking at their finances, you know, we talk about where the money is going to come from for down payment and for other sources. Oftentimes it's coming from family or it's coming from stock trades, if they are an equity holder in a business or some other source. But very few people can actually work a 9-to-5 job and save up for a significant down payment on a home just from their paychecks alone. Those days are long gone. So, you know, one concern I have for my younger clients is just the expense and the fact that the price of homes are so out of whack compared to salaries nowadays. The second thing that I have a big concern about in the housing market is houses used to be a place where you lived and where you raised your family. There was land attached. It just served this express function of providing shelter for you and your family. Somewhere in the last 30, 40, 50 years, houses became commodities. Okay, houses became investments. And when something becomes a commodity, markets and people start behaving in very strange ways. You have a person who lives in one house but owns 10 houses and just rents out the 9 other houses for profits. You have situations where people have empty condos that they buy just to piggy bank money. They don't put a tenant in it. They don't ever rent it out. It's just an empty condo that they bought because they need to piggy bank money somewhere for a few years and want to see good appreciation on it. And real estate is a commodity that has good appreciation. You see situations like in Toronto, there's a 300-foot condo. Well, who wants a 300-foot condo selling for $600,000? The answer is no one wants a 300-foot condo selling for over $600,000. It was purely built as a commodity for some foreign investor or domestic investor to store their money. As long as they can find someone else to buy that condo that has investment purposes, they're doing fine. But the moment that they need to sell that condo and someone needs to look at it from the perspective of, I need to live in this space, they've got a problem, because there's no market in Toronto or wherever for a 300-foot, $600,000 condo for one person. So there's a lot of things that have happened that have driven up the price of housing. There's a lot of housing that has been built in the US and around the world that is completely uninhabitable and was never intended to be lived in. It was purely built as a store of value for people to piggy bank their money. And that takes actual usable housing off the market and drives up the price of existing housing. Okay. The next issue I have with homeownership, and this is the 800-pound gorilla in the room here in California, is insurability, or I should say uninsurability. There are large parts of California, and specifically of the Bay Area, that are uninsurable. And this is due to recently, in the past 10-15 years, we have had a spate of floods and wildfires that have made insurance companies basically pull out of large stretches of areas. We're also on a major earthquake fault. We haven't had a major earthquake. We had the '89 quake, but the 1906 quake was really the big one, and there's no one alive today that remembers how devastating that earthquake was. But insurers are getting nervous. They are pulling out of areas. I have clients, I get at least 3 calls a week from clients in California and in Florida. Florida is another hotbed where this is happening, where a client has had a certain insurance company for the past 30 years, never filed a claim once in their lives, and they're being dropped. So it's really disturbing, because once a house is uninsurable, you cannot sell it. Or basically, a bank will not put a mortgage on an uninsurable property. So the only people who can buy your property, if your home is uninsurable, are cash buyers. And there's a very limited market of full cash buyers, and so it drives down the value. It bricks the value of the house. So a lot of my clients, when they're going out and they're starting to look at houses and they're starting to look at different areas, I always tell them to ask about the claim history of the house. If the former owner put a bunch of claims for insurance on the house, they may have difficulty insuring that house. And is there a trend of uninsurability? I just got a message that yesterday a local Bay Area community, a major insurer, is dropping 3,100 homes in that area. So this is ongoing and evolving. If you're buying in certain geographic areas, you really need to ask some questions about insurability. I just had a great conversation with a lovely client, young man, is Gen Z millennial, and he is in the northeast of the United States, a small state in the northeast. And he was excited because he was thinking about buying his first home. Well, you know, in Massachusetts, Connecticut, that area, they don't have the same issues that we're having with uninsurability here in California and Florida. We looked at his finances. He was all thumbs up to go ahead and move ahead with searching for his dream home in the area in which he lived. And I was really excited for him, versus a client who reached out to me who is looking to buy a home in Florida near the water. There were so many questions about insurability and what was the future of that property. I really couldn't sign off on the idea of buying a home in the community in which he found that house. It was pretty certain that that home at some point is going to be uninsurable, and this client doesn't have the resources in order to allow that property to basically brick in value or to self-insure. So uninsurability, I'm telling you, it's the 800-pound gorilla in the room. I was at a conference for wealth managers earlier this week. A lot of the wealth managers were having conversations about uninsurability of homes and cars. Certain auto insurers are pulling out of places too. And what does that mean for protecting wealth and wealth management in the future if your clients cannot insure their assets? So the next thing about home ownership that is really concerning is global warming. It used to be you buy a home somewhere and expect reasonably for the next 30, 40 years it would be as it was, and there would not be any major catastrophe there. Now I'm not so sure, especially in certain areas of the country that are particularly prone to flooding, wildfire, and other natural disasters. A couple of bad seasons, a couple of years of drought, a season of heavy rain can just wipe everything out. We're also seeing more extreme weather events, tornadoes, hurricanes, storms, landslides, things like that, that we just didn't see a generation ago. And this goes hand in hand with uninsurability. If your home is uninsurable or is lightly insured because you can only afford the bare minimum, you can't afford to insure it to its full value, you really are assuming a lot of risk in purchasing a home. So there you have it, and maybe I'll do another video where I'll talk about my own experiences as a financial advisor in purchasing my own home, but I'm not nearly as optimistic in home ownership as I was even a decade ago for the younger generation. There's so many more factors that need to be taken into consideration, and I really think uninsurability in parts of the United States is really going to transform the real estate industry, because I think it's the beast beneath the surface that is starting to come to the surface, and people are starting to realize that this is a major issue if their home insurance is dropped and they are unable to be picked up by a new carrier. So there you have it. Tell me what you think, tell me what you like, tell me what you don't like. If you found this useful, please like, share, and subscribe.